please click on the interpretation icon on the panel at the bottom of the screen and select your desired language. Once you have done that, you can select mute original audio only to hear your desired language. If you have any difficulties accessing the service, please feel free to reach out on the chat and a member of the team will gladly assist you. I am Maida Buvinic. I am a senior fellow of Data2X, and Data2X works with partners to improve the production and use of gender data to better the lives of women and girls. On behalf of the Alliance for Financial Inclusion, the European Bank for Reconstruction and Development, the Financial Alliance for Women, the International Finance Corporation, the UN Capital Development Fund, the Women's Entrepreneur Finance Initiative at the World Bank, and Data2X, I would like to extend a very warm welcome to each and every one of you for joining us today, for unlocking the power and potential of women's financial inclusion data, lessons learned from 6 countries. Despite an increased awareness of women's importance in financial inclusion, women remain unserved and underserved in all segments of the financial market. The problems persist and is exacerbated by gaps in the collection, quality, and use of gender data. The Women's Financial Inclusion Data Partnership is a coalition seeking to improve the availability, production, and use of sex disaggregated data to promote women's financial inclusion. The partnership, with support from the Bill and Melinda Gates Foundation, is undertaking pilot projects in 6 countries to develop supply-side gender data to increase women's financial inclusion. The partnership is working in Bangladesh, Honduras, Kenya, Nigeria, Pakistan, and Turkey. And I really thank, on behalf of the partnership, to these countries who have been willing to be partners with us in this effort. Today, we are launching the results of the first diagnostics phase of the work in these 6 countries. While every context is unique, the good news is that much more data is available than we ever thought. The challenge, however, is to put this data to work, to good work, to drive real progress. To do so, we need champions and political will, and collaborations between governments and the private sector providers, and better internal advocates and partners. So, but more to come, and Rebecca Roof from the Financial Alliance for Women will go into more details on the data. The event will feature an overview of these key research findings and 2 panels and a number of messages. We invite you to share questions throughout the event in the chat window, and we will be monitoring the chat, responding to comments, and will be collecting questions for the panelists and speakers. Once again, I would like to thank you for joining us in this important event. We will now hear a message from someone that I greatly admire for her deep commitment to development and her grace, is Dr. Antoinette, the Deputy Manager Director of the International Monetary Fund.
A very good morning or good afternoon to everyone, depending on where you are joining from. It is my great pleasure to address you at the start of this important event. We all know, of course, that increasing women's access to finance goes hand in hand with higher economic growth and lower inequality. Yet, women around the world continue to be financially unserved or underserved. Reasons for this gender gap may vary across countries, but one common challenge in understanding and addressing it is the lack of granular data on women's financial access and use. Gender data is fundamental to help track developments in women's financial inclusion. It enables policymakers to formulate actions based on evidence and to assess their impact. But in practice, the availability of gender data is scarce, and even when available, its use is limited. The good news is that we are making progress. And here I want to highlight the critical contributions of the Wfid partnership. Through this initiative, international organizations and private sector partners have joined forces to promote the collection and use of gender data for policymaking on financial inclusion. Let me also take this opportunity to congratulate the 6 countries that participated in the Wfid partnership pilot, these being Bangladesh, Honduras, Kenya, Nigeria, Pakistan, and Turkey. Their experience will be extremely valuable to other countries that seek to make progress on women's financial inclusion. For our part, we at the IMF are stepping up efforts to increase the availability of gender-related financial data. Our Financial Access Survey, launched in 2009, now also collects gender disaggregated data for over 70 countries. We are now seeking to expand coverage to digital financial services. We also conduct capacity development workshops to support member countries in their data collection efforts. Our focus is primarily on low and lower middle income countries, where the need for more granular data is greatest. So let me close by wishing you all a great, very productive event. I look forward to hearing about your deliberations and to our continued partnership. Thank you very much.
Thank you, Antoinette. I am very pleased now to introduce my colleague, Rebecca Ruff. She and I have been partners in this work for quite some years now, and she will present the lessons learned from the 6 countries.
Thank you so much, Myra. Delighted to be here with you. And if we could have the slides, please. Thank you, Lauren. But this work really started more than 8 years ago in what seemed like a very simple premise that data can drive women's financial inclusion. However, the more people we talked to and the more research we did, it became clear that there was no clear vision to what that actually meant, and therefore no way forward. So we developed a gender data strategy back in 2017 to guide that vision. And it became very clear to us that a global approach was not sufficient, but that we needed to build national level ecosystems. So we chose 6 countries to work in, and this was based on a number of factors, including regional diversity, women's financial inclusion, gender gaps, gender data readiness, among others. But to do that, we first needed to understand each of the data ecosystems. And that was actually not an easy task, but a task that we learned a lot from, and that is why we're here today. So I'm delighted to share with you some of the key lessons from the diagnostics, conducted in the 6 pilot countries. In the next slide, you'll see that I wanted to show a very quick note on the approach that we underwent, and I just wanted to highlight 2 quick things. Firstly, in developing the diagnostics, we realized how important awareness building was. It did not matter if countries were just starting or if they were far ahead. We also learned that the process of engaging with stakeholders itself was creating that awareness, and that the process of any national level work is super important, and that must be well orchestrated. Secondly, the diagnostics are not the end product, of course, but an input towards the interventions that we're working on in each country. And these are just a starting point, and certainly broader efforts are needed. We're also developing a playbook that will catalog all best practices, and we hope other countries can adopt. In the next slide, you'll see that the pilot work was really guided by the theory of change developed as part of our gender data strategy, where we asked, where can data have the highest impact in women's financial inclusion? So on the right side in the graph, you'll see that FSPs and policymakers basically move through a women's financial inclusion pathway with 5 stages, from being simply unaware of the relevance of women's financial inclusion, to becoming aware of the gaps, to considering action in response to the knowledge they have attained, to taking action, and to implementing strategies to close the gaps. And finally, to demonstrating impact and becoming champions of women's financial inclusion. So we looked at how data can help move FSPs and policymakers across this funnel. And to understand the data gaps in each country, we looked at their gender data readiness, which meant supply side data at 4 levels. So from the bottom, is there understanding about the value of gender data? Is gender data actually available? Is it consistent or reliable? And is it being used? And I will pause here just to highlight the type of data that we looked at, because I feel a lot of the times we're kind of talking past each other because we're talking about different data. Our focus was national level supply side data because that's where we found the biggest gaps. But we also looked at national level demand side data because clearly one cannot go without the other. So in the next slide, you can see both frameworks summarized for each country. And all 6 countries have advanced along the pathway, although more progress is needed to reach the point where comprehensive gender data is available and used effectively to propel women's financial inclusion. So we found that countries that are more advanced in data readiness dimension tend to be further along in the women's financial inclusion journey. And although we cannot prove cause and effect, this certainly confirms our theory of change. We also saw that in most countries, regulators have led the way and encouraged FSPs to move from consider to action. So a very important role here for regulators to play. So in the next slide, we just want to give you some of the key highlights. Certainly the insights were varied in each country. So we do encourage you to look at all of the reports, but here we just highlight the general areas. So we divided basically into 4 areas. The first one, data availability. We found that countries are at a good starting point, but certainly more, and certainly more than we expected, as Myra mentioned. We saw that demand side data is available in terms of national baseline surveys, but limited supply side data on the aggregate, and especially weak on supply side WSME data. In terms of actions, we found that the role of ecosystem influencers, as Myra also mentioned, has been key to driving data collection and reporting. And for example, the regulators in Bangladesh, Honduras, Nigeria, and Pakistan have played a key role, as well as other actors such as banking associations and industry makers such as FSDK. Secondly, although there is a big push in the international community around supporting WSME, this contrasts the huge gap around WSME data. And thirdly, the limitations in either supply or demand side data impede a thorough understanding of the women's market, and this really underscores the importance of the complementarity of both demand and supply side data. On the data production side, we saw that the uneven mechanics of how data is generated impacts quality and makes standardization difficult. So for example, FSPs in several countries, including Bangladesh and Kenya, typically rely on manual data entry, which increases risk of errors and affects quality and reliability. A second challenge is that the types of data FSPs produce to meet these requests are not necessarily the types of data that could deeply inform decisions to develop commercial solutions. So for example, many times regulators ask for data on number of accounts, but this information is only the beginning of what is needed to design commercial offerings. So granular sex disaggregated indicators such as non-performing loans, as well as customer level data are key for FSP business objectives. In the next slide, you'll see a little bit about data usage. And we found perhaps one of the most important findings, in my opinion, was that gender data is not routinely included in management information reports. So for example, just 25% of microfinance banks in Nigeria and less than 40% of FSPs in Pakistan routinely include sex disaggregated data in their management reports. So a key action here is really to mainstream the data into management reporting. And secondly, the lack of capability on gender data analytics is another big constraint and speaks to the importance of building those skills. And here Wfid is also organizing a gender data learning series for FSPs. And the fourth area is data driving action. And here we found that FSPs do not routinely use gender data to inform the design of products or services, nor do they track the performance of women's portfolios. And to some extent, this could be due to knowledge gaps, but we saw that FSPs themselves are really eager to close them. However, there's a bit of a circular logic at play because many FSPs said that they wanted more evidence of the business case, but they actually have it right at their fingertips in the form of gender data. They're already producing, but they're not using. So here we found that governments, donors, and international networks have a really strong role to play in breaking this cycle by publishing best practices, research, use cases on the business opportunity of the women's market. So finally, in the next slide, you'll see the diagnostics. We really hope that they're useful, not just for the 6 countries, but beyond. And we really believe that they have catalyzed and or reinforced important conversations. They have helped build coalitions of stakeholders, and that they also have provided useful analytical frameworks. But ultimately, the diagnostics call attention to important role and contribution of different public and private sector stakeholders in advancing countries along the pathway towards full financial inclusion. And they highlight the need for coordination, for collaboration among all stakeholders to develop data-driven women's financial inclusion solutions, and why we're all here today. Thank you.
Thank you so much, Rebecca. And again, many thanks to the countries who have participated, who are participating in this initiative because of all your contributions. And also many thanks to CCX that has consulted with us and has led the work in the countries. So I'm really pleased now to start the first panel and introduce Juanita Leckie, who is the head of the Women's Entrepreneursh Finance Initiative at the World Bank. And she will be moderating this panel. And I'm just very impressed with Wendy, and a shout out to you, because she just got off a plane and she's at Heathrow Airport. And it looks like she has never been left Washington, DC. So turning to you, it's all yours.
Thank you, Myra. And I can actually prove your point here. I have the equipment from the airport right next to me. So I apologize if there's any background noise that's disrupting anything, but hopefully it'll be pretty quiet in this little corner I'm in. So thanks to everybody for organizing this and all of the incredible hard work you've done on these pilots, which we've been hearing so much about over the last months and have been really impressed by it. Most of you probably know Wfid is an entity that sits in the World Bank, and we fund projects to support women entrepreneurs through 6 multilateral development bank groups. And one of the things we're very focused on, and we've just allocated about, from our last allocation of about 50 million funds to support the multilateral development bank groups to do more with finance and data for women entrepreneurs. So we're very eager to see progress in this area. These pilots are really the stepping stone to make a big difference in how women are financed. Let me turn to my panel, who I'm very eager to hear from. They're the practitioners on the ground who have been trying to figure out how to make this all work from the regulator side, and I'll introduce them first before asking a question to the group. So first is Sophia Abu. She's the head of the gender desk in financial inclusion delivery unit of the Central Bank of Nigeria, which has done an amazing amount of work to really bring financial inclusion and gender to the fore in that country. And she oversees the framework for advancing women's financial inclusion, working a lot on digital and data issues. Second, I would like to introduce Mr. Mohammed Abul Bashar, Executive Director of Bangladesh Bank, who's specialized on financial inclusion, SMEs, banking, agricultural credit, and many other areas, and was recently appointed to oversee the monitoring and supervision at the National Financial Inclusion Strategy Administrative Unit in the Financial Inclusion Department. So very much in the middle of things in Bangladesh, which is such an important country for financial inclusion. And finally, Alba Luz Valaderas O'Connor, who's the Chief Commissioner at the National Banking and Insurance Commission, CNBS, in Honduras. And she has 14 years of experience working with examinations of insurance and pension fund institutions and on financial inclusion issues. So we very much welcome all of you here. Today, we're going to be discussing the production of women's financial inclusion data. This is the data that they've been looking so closely at over the pilot process, the role that regulators play and financial service providers play in producing this data, the barriers they face, and the opportunities to increase the availability and quality of this data. So let me start by asking the three of you, and we'll go in the order that I introduced you, about a key theme that's emerged from the research, which is the critical role that regulators can play in championing gender data with the financial service providers. And in each of your countries, your institutions have encouraged financial service providers to collect and use gender data, which has been instrumental in helping move this forward. So I'd like each of you to share how you came about to do this in your country. Why did your institution prioritize gender data, and what steps did you take to collect the data? I'm very excited to hear your answers, and we'll start with Sophie.
Thank you, Wendy, and good afternoon, good morning, and good evening to everyone who's on the call. So at the Central Bank of Nigeria, data collection is something that's very critical to the work that we do. So generally, to start with, our financial services providers provide data essentially on the prudential requirements and a lot of the other things that we collect from them. But more specifically around financial inclusion data, one of the big things that happened in that space was our membership essentially on the Alliance for Financial Inclusion Data Working Group. I mean, we've collected data over the years, we've worked with the data, we've actually tracked financial inclusion data since 2010 in Nigeria. But towards the end of, I think it was 2017, 2018, a lot of the conversations started to move in the direction of essentially understanding what was happening with women's financial inclusion and how we were going to be able to close the gender gaps in access to finance for women. And so the first thing that we did here at the Financial Inclusion Delivery Unit, which is where I work, is to engage with the financial services providers around the data that was already being submitted, because we have supervisory departments here which collect that data. But we wanted to essentially monitor the financial inclusion indicators specifically. And one of the things that we found out as we started to look into the data was that those returns were being submitted, but essentially the platform that was essentially set up to collect that data didn't have the fields to properly gender disaggregate that data. And so we then started to develop a template to collect that data across the industry, engaged, and ensured that it was properly articulated.
Great, thank you very much. And let me turn now to Mohammed Abdul Bashar, and hear a bit of their story about how they came about collecting this data. And one of the things I wanted to point out that's been interesting for me, because we focus on entrepreneurship, is how different it is to collect data on at the enterprise level versus the consumer level. So anything you can illuminate about that would be welcome as well.
Thank you very much, Ms. Wendy. Good day to all of you. You know that in the panel, I am the only male person. So it's a pleasure for me that all 7 others here learned colleagues from women part. So here we embrace the women empowerment. Okay, so in response to your opening question, I would like to mention here that from a policy maker's perspective, some question must come forward while making financial inclusion policy. These are who is included, excluded, what are the reasons for their exclusion, which financial products are being used and by whom, how women's financial needs differ from men's, which products need to be tailored accordingly. To answer all these questions, we need to have gender segregated data, also to implement appropriate policy measures. There is no alternative to have gender disaggregated data collection. So you'd be happy to learn that in Bangladesh Bank internally, we have at the very beginning of the year 2010, we established a very dedicated department called SME and Special Programs Department. The main aim of establishing this department was to promote entrepreneurs, and there are 2 entrepreneurs, particularly CMSME entrepreneurs, to create an equitable, inclusive finance platform for both the male and female entrepreneurs. Bangladesh Bank started giving a specific cap to the refinance scheme, where it is instructed to all banks and financial institutions that a certain percentage of the refinance facilities should be provided to the female entrepreneurs. Thus, separate data was required to keep the track of policy implementation. In this way, BB gives priority in gender segregated data. This is our internally we have done. But externally, you know that we got the membership of Alliance for Financial Inclusion in 2011 and also signed a Maya Declaration in 2014. So under Maya Declaration commitment, BB has given priority in collecting gender segregated data. In addition, keeping pace with the financial inclusion champions worldwide, Bangladesh Bank emphasizes on collecting gender segregated data in various policy tools so that the data status can be comparable in different aspects. Also leveraging on women empowerment and economic development, Bangladesh Bank understands the value of gender segregated data and started collecting it based on different policy issues such as agent banking, CMSME, financing, MFS, etc. So this is a few words from my side in response to your question.
Great. Thank you so much. Now, I'm already hearing some common themes around setting up the right institutional context, having a network of organizations that are like-minded, helping think through these issues, and thinking about the policy instruments. Let me turn to Alba to hear how this has come about in Honduras.
Okay, good morning, good afternoon to everyone. It's a pleasure to be here so we can share some experience and knowledge about financial inclusion for women. In Honduras specifically, in 2019, a cooperation agreement was signed with Toronto Center to implement a financial inclusion plan for women in Honduras. The purpose of this agreement was to strengthen the capacities of the CMBS, that is the financial regulator of the Honduras financial system, so that based on evidence, it could design financial inclusion policies for women whose impact will be measurable, and that therefore will lead to the formulation of better financial inclusion policies for women. For example, the steps that we do to obtain the information, first of all, was to identify what were the availability of internal and external sources of information. Also, we held focus groups of women with micro, small, and medium-sized enterprises. I believe that is a topic or an issue that we need to recollect. Still need to recollect more information, but because, as you said on a few moments ago, it's more easy to get information for a financial consumer than for a MSME. We also have the financial gap for women began to be measured annually, bringing us closer to international standards. We have 4 editions of financial gender gap report that have been published here in Honduras, and as well on 2019, the annual financial inclusion report that were already being generated, data disaggregated by sex and the use of different financial products, began to be included.
Great, thank you, Alba. Let me actually follow up with you, because it's my understanding that Honduras is looking at introducing an electronic financial inclusion information system.
Yes.
We know digital has been so powerful for getting new financial instruments out the door, but the ability of using data and analytics and have electronic reporting systems so that that's all much more accessible is critical. So could you talk a little bit about what you'll be doing with that, what you think it will enable, and how you think it will help close the financing gaps?
Yes, of course. This system will allow us gather financial inclusion data from supervised institutions with greater disaggregation segments of interest, such as sex, age, department, among others, on the use of financial products and services such as deposit, electronic wallet, pension funds, reciprocal guarantees, and insurance. And also it will give us relevant information on the inclusion of micro enterprises, since we will have data on the number of employees and the size of the companies. And also we are having a field that if the owner of that micro, small enterprise or medium enterprise is a woman or a man, we will have that gender field. This system will provide us quality data, since business rules and validations are incorporated. That wouldn't be, that we wouldn't receive that type of information if we receive it on Excel. To this end, when collecting information from other unsupervised sectors, such as cooperatives, in March 2022, we carry out an internal development called an online financial inclusion survey 2022, which was applied to the cooperative for our country here in Honduras. Finally, the new system will allow us to continue with the project of creating a dashboard on financial inclusion data, that we can share that dashboard with the financial service providers, so they can make decisions and establish the products for women as they need it. However, in the process, we have found some barriers in establishing this electronic report. These barriers have been that many institutions did not have the level of detail, which meant that they changed their collection process of data. We also have lack of information systems that speed up the generation of data. Not all supervised institutions or inclusive cooperative and microfinance institutions have robust systems for collecting and processing data.
Thank you. I have so many questions. I want to learn a lot more about that, but unfortunately, we don't have enough time, so I'm going to rely on people putting questions in the chat. We'll come back to questions later. And let me ask Mohammed about the mechanics of data production. We know how challenging it is to get institutions to collect that data. The incentives sometimes are misaligned. Sometimes it's the technology that's misaligned. Could you talk specifically about what Bangladesh Bank has done in order to improve the mechanics of collecting that data? You're on mute.
Okay. You know that Bangladesh Bank in the field of data collection, we are just not appropriately doing, or we are just collecting data in not in regular interval. So it is hard to monitor the progress and to confirm policy measures accordingly. So it is imperative to establish a clear format and a stable channel to collect and collate data from both the demand side and the supply side. We believe that collecting and analyzing sex disaggregated data can unlock the potentialities. Again, sex disaggregated data may help the financial institution to develop a more accurate picture of the market and build a better business case for developing products and services tailored to women's needs. Till now, several departments of Bangladesh Bank are responsible for collecting separate data on their particular policy tools, such as SME and Special Programs Department in Bangladesh Bank. They are collecting gender segregated data from banks and financial institutions, both in hard copy and soft format. These data are being used for the purpose of the policy analysis. We have another department called Financial Inclusion Department. This department is collecting quarterly gender segregated data on agent banking, school banking manually. That department is also publishing quarterly progress report of agent banking and school banking after analyzing the data submitted by the banks in Bangladesh. We have also another department, a statistics department. It is collecting gender segregated MFS data and agent banking data on monthly basis electronically through RIT. These data are published in our website for public use. And some data on no-frill accounts are also being collected by Financial Inclusion Department, Agricultural Credit Department, but these are not sex disaggregated data. For implementing financial inclusion policies appropriately, gender data are essential for designing, monitoring, and evaluating intervention which support women's financial inclusion. Gender data can clarify an intervention's mandate, diagnose the situation, and establish a platform for women's financial inclusion. We are currently approaching for a comprehensive financial inclusion data format and reporting platform. We are planning to finalize the financial inclusion index and indicators to measure the depth of the financial inclusion in Bangladesh. We really need to develop the comprehensive reporting format and developing the digital platform where to collect the data in a regular interval and generate financial inclusion report electronically.
Thank you.
I'm happy to share that currently Bangladesh Bank is collaborating with Data2X, Consumer Centrics, and Financial Alliance for Women to explore the opportunity to develop a digital data dashboard for financial inclusion indicator, especially focusing on gender data.
Thank you very much. It's great to see all that work. And I want to turn to Sophia. I know we're running out of time. So Sophia, very quickly, I know that Nigeria has been mandating collection of data for some time now, yet there's still many gaps in the data. So could you, and also not only that, but the use of the data, how do financial institutions use that data? So I just wanted to, if you could give a few words on what you've tried to do to increase the use of the data and the capacity of the banks to use that data. And then I think at that point, we're gonna have to wrap up unless I have the organizers tell me I can have one more question.
Thank you, Wendy, and I'll try to be brief. So one of the things that we're doing currently, as you rightly mentioned when you introduced me, was we're implementing a framework for advancing women's financial inclusion. And so the rationale essentially is to try to close that gender gap in access to finance. And to be able to do that, we need to monitor and measure, what's happening in that general area. So with the financial services providers, there's quite a lot that's happening. There's a lot of data already being collected and submitted. Like you rightly mentioned, we're trying to work with them to ensure that they're moving from across the pathway from, the consider to actually being able to have action and use the data. So we're working with them. We're currently about to develop a women's financial inclusion dashboard in collaboration with the Consumer Centrics and all the members of the Wfid partnership. And what we hope that is going to do essentially is make available the data that already exists to these financial services providers, so that what you're doing is providing the business case, as it were, to serve the women's segment. And so once that data is available, then we're able to properly work with the financial service providers. We've provided business case and they see that it's good business. And then they're able to properly develop products and services tailored for the women's segment. That's all from me. Thanks.
Great. Thank you so much. I'm going to take a lightning round. I literally want like 4 words from each of you. If you had something to say to the financial service providers, we've talked so much about the regulators. What would you say for the financial service providers that they need to focus on in order to get the data in 1 sentence before we wrap up? Let's start with Sophia.
Thank you. So to the financial services providers, I mean, it's almost an old adage, right? You can only monitor what you measure. And so it's very, very essential to be able to track, collect the right data and track progress, essentially, as it concerns women's financial inclusion. Thank you.
Thank you, Sophia. Great role modeling on the speed. Mohammed, how about you? What's your message to financial service providers?
Thank you. Mobile financial services in Bangladesh and other countries as well are generally thought of as a fintech service. The fintech service providers usually rely on data analysis for designing their products and services. As a result, the providers give importance in collection, cleaning, and organizing as many customer data as possible. Bangladesh is currently doing wonderful progress in MFS intervention. Bangladesh has a strong and robust national identification database, which was introduced in 2008. When MFS was introduced in the country in 2011, the MFS providers were instructed to open accounts verifying NID. Furthermore, Bangladesh Bank introduced eKYC and NID verification in real time, and customers had the opportunity to open bank account and MFS account on their own. This identification of the accounts provides an unique opportunity to understand the spending and saving habits of the female account holders. This data now provides profound opportunities, starting from designing and deploying women-centric products to credit assessment. This data can even provide.
I have to move on to Alba. So thank you very much. I think that's getting to the root of where you're collecting the data at the coalface with the financial institutions. So thank you very much, Mr. Bashar. Alba, how about you?
A few words, as you said. Okay, for us in Honduras, data is power. Financial service providers need data to measure and know what model business they need to grow the financial system, and also that growth becomes an economic growth for our country. And we are available to work together.
Okay, I love it. Data is power. That's a great message to end on. And I'll look forward to having many more conversations with all of you on this topic going forward. Thank you very much.
Thank you so much, Wendy, and thank you to all our panelists. You were all great. The panel conversation, and it really highlights 3 main topics. One, the importance of having internal policies, financial inclusion policies that express, I think, the political will in these three countries, in Nigeria, Bangladesh, and Honduras, to include women in the financial sector. It also showcased the importance of mechanics, the dashboards, the templates in Nigeria, and I think it also showcased the incredible importance of stakeholders. And the Alliance of Financial Inclusion, I mean, has really had a very important role in helping countries promote gender data, and it should continue to do so. It's terrific. And also, Toronto Center for Honduras, I think the critical role of external stakeholders in helping countries progress on gender data and financial inclusion is obvious. It is my great pleasure now to, before I go into presenting the next two messages, I want to acknowledge that among us is the Deputy Governor of the Central Bank of Nigeria, Dr. Aisha Ahmad. We are delighted to count you with our panelists and our members here, and we are also, incredibly grateful for the work that you have done in the Central Bank of Nigeria for promoting women's financial inclusion. Now I will turn on to two messages. A message from Elsie Ado Awad, the Deputy Governor of the Bank of Ghana, and actually the chairperson of the Gender Committee of the Alliance for Financial Inclusion. And our second message is from Dr. Tukiya Kankasa Mabula, the former Deputy Governor of the Bank of Zambia and a member of the steering committee of the Wfid partnership. So let's hear these two messages.
The gender gap in access to finance is stuck at 9% since 2011 for much of the developing world. Thanks to the recent pandemic, as well as the economic fallout that we have seen all around the world, the plight of women when it comes to access to finance has actually worsened. The time has come for more action by all stakeholder groups to eliminate this gap in access to finance for women. Evidence-based conversations need to happen, and evidence-based policy, regulation, and other action are needed to be able to remove the barriers that continue to fight against women's access to finance. To be able to do this, data is key. Sex-disaggregated data is critical to allow all stakeholders understand the dynamics of the access to finance problem for women. It is important that both from a supply side and a demand side, we have sex-disaggregated data that allows us to understand what fights against women. What are these barriers that we're talking about that do not allow women to be able to access the critical financial services they need in order to start, to grow, and to maintain and scale up their businesses wherever they find themselves. It is not only good for women, it's also critical for their communities and for national economies and the global economy as a whole. Sex-disaggregated data is key, and both regulators, policymakers, as well as all stakeholders need to adopt measures to be able to start collecting such data. The Alliance for Financial Inclusion, AFI, has been very helpful to its network of members by providing much guidance on how to collect sex-disaggregated data and how to analyze and report on it. So the AFI toolkit for sex-disaggregated data, as well as the reporting templates which were published a few years ago, have been used around the network to be able to make progress in this regard. In the case of Ghana, the Bank of Ghana has rolled out a supervisory reporting template using Subtech, which allows all our regulated financial institutions, banks and non-banks, to be able to report their prudential data to us on a monthly basis in a sex disaggregated manner. This allows us then to be able to analyze the trends we see in terms of the supply side of financial services, as well as on the demand side, what the dynamics are that become evident as a result of data. So on this occasion, let me re-emphasize the importance of sex disaggregated data, the collection of it, the analysis of it, and the use of it to be able to shape action towards the objective of promoting more gender inclusive finance. Data is king, and what gets measured gets done.
Firstly, I wish to thank the Women's Financial Inclusion Data Partnership for according me this opportunity to share my perspective on the importance of advancing women's financial inclusion with data. In my view, women's financial inclusion data is one of the most powerful tools that can be used to move the needle towards full financial inclusion of women. Gender data is an enabler. It paints the picture of where we are and enables us to plan and to set targets for where we want to be. It opens our eyes to the reality and to what interventions are needed. It also enables us to monitor our progress, measure our achievements, as well as to hold ourselves and others accountable. I have had various experiences that have fortified my belief in the importance of gender data. This has ranged from being confronted by bankers to show them the business case for women's financial inclusion. I also witnessed just how lack of data can constrain decision making, as well as hold back progress. And this was in my capacity as chairperson of the Gender Inclusive Finance Committee of the Alliance of Financial Inclusion, when we adopted the General Action Plan. And some member institutions were unable to set gender-specific commitments and targets due to a lack of data. I have also witnessed the shattering of widely held assumptions by financial service providers of just how well they were serving the women's market after the supply side sex disaggregated data baseline survey was published. I'm, however, struck by just how many countries are still not collecting sex disaggregated data. I therefore believe that the National Gender Ecosystems Project being done by the Wfid partners is the way to go. The Wfid partners should be commended for this initiative. Thank you.
Thank you so much, Dr. Elsie and Dr. Tukiya. And now we will turn to the second panel, and I am delighted to introduce the godmother of this project, really, Rosita Najmi. She is the head of Global Social Innovation at PayPal, and she will be moderating the panel. Rosita.
Thank you, Myra. It's such a pleasure to be here, and just want to start off with a thank you and a congratulations to the host of today's event. The fact that today's conversation has 7 hosts is not a coincidence. I think it's a reflection of what's needed in terms of collaboration across a multitude of organizations, and just really want to commend the collaboration that has happened to get us here today. Really just want to also say congratulations on what an exciting day today is for gender equality, for women's economic empowerment, and for data for good. Realizing the potential of data for good requires both skill and will. It also requires leadership, and want to really acknowledge the courageous leadership of our regulators, some of whom we've heard from today, for taking action so that the contributions of women to their economies are no longer invisible. So with that, I have the treat to transition now to a 20-minute conversation with two global experts. And we're going to hear from each of them reflections on 3 questions. Our first expert is Dr. Melsa Ararat. She is the founding director of the Corporate Governance Forum of Turkey, and she also serves as a professor of management at Sabancı University. Our second expert is dialing in from Kenya, Tamara Cook. She serves as the CEO of the financial sector Deepening in Kenya, FSD Kenya. So for our opening, just want to really, again, welcome both of our experts and thank you for joining this exciting moment and milestone. And please share with us your reflections. We've now heard from the regulators, their perspective, and would love to hear your thoughts on why aren't financial service providers and the sector in general paying more attention to women? And why aren't they trying to tap into this potential revenue source? Maybe Melsa, we can start with you, please.
Thank you very much for inviting me to comment on financial inclusion of women and the importance of data to enable that. Well, if your question is why financial service providers isn't paying enough attention to women account owners, in the language of the banks, I must say, as a revenue source, I think the answer is simple. Accounts owned by women is not perceived, quote unquote, to be profitable enough by the management, by bank management, to justify investments into women-centered products, products specifically designed for women in their specific markets. As we heard in the opening, every context is unique, and why profitability is an issue is probably based on different reasons in different contexts. Surely we know that women are better loan clients everywhere, but for example, women-owned SMEs grow at a much slower rate. Therefore, future profitability of the accounts held by women may be lower. Therefore, a management decision to design products and services specifically for women, among other options that are available to them, depends on, first, of course, the availability of data to conduct feasibility studies and project future profitability. And of course, we know that demand side data is not only difficult to collect by the financial service providers, but also difficult to act upon by them, since addressing the barriers to profitability requires public policy interventions and or development finance. And that's not something that banks can do on their own. But if the question is whether financial service providers should pay attention to women, is a definitive yes. From a welfare perspective, from research, we know that account ownership can help reduce poverty and economically empower women in the household. And women are, as we know, stronger entrepreneurs. They tend to hire more women, they are more caring, they're more likely to create impact on social value than their male counterparts. But these are not business goals. These are public good and should be considered by the regulators and lawmakers. I think here I would therefore point out that the discussion around how to improve women's financial inclusion should not be focused or justified on the basis of profitability or business case, but based on the notion that financial inclusion of women is a public good. That said, availability of data is a must for public policy interventions to encourage banks to pay more attention to women. And I'll stop here.
Thank you. Really appreciate that tension. You know, the evidence base, we have randomized controlled trials upon randomized controlled trials that tell us what happens when women have that access to quality, affordable products, but yet the business case is not as clear and the profitability not as obvious. So really appreciate those insights. Tamara, over to you, same question. What is your perspective of what's keeping us from focusing on this potential?
No, it's a great question. And I really appreciated your perspective, Melissa, especially on that business case question. I would say in Kenya, there is actually appetite and interest in serving women from financial service providers. What is perhaps more lacking is, how do I do it? And I think in Kenya, we've come a long way on collecting the demand side data that is gender disaggregated between men and women to better understand what are those gaps, what are the differences in use, what are those barriers, and how are those differentiated? I've got a screen here, and I kept looking to the right because I'm obsessed with data, and I'm like, what about that chart? Which graphic, which statistics should I quote as I'm thinking about what is behind financial service providers' inability to really reach women and meet their needs? In Kenya, we have pretty remarkably reduced our gender gap from 2006 at 13% to 4.2% in 2021. And that sounds great. You're like, wow, 4.2%. That is a not bad gender gap. We'd love it to get to zero, of course. Interestingly, when we look at the last 2 years, we can see that actually women's financial inclusion has actually grown slightly faster than men, while financial inclusion has almost leveled, just marginally increased, perhaps some COVID impacts there. But then when we double click into, okay, so the gender gap is 4.2%, but what does that mean for particular usage for particular products? And so we see a very small gender gap in mobile money, 5%. But then when we look at banks, that gender gap is more like 12% between men and women. But then when you split the bank account and you look at kind of traditional bank accounts and digital bank accounts, you see that traditional bank accounts have a higher gender gap, whereas digital has a lower. So what is it about digital services that are reaching women? How are women more able to access those? And yet, why aren't more women entering those? So then you double click into that demand side data again, and you look and you see that women are almost twice as likely not to have an ID. They're less likely to have a phone. There are 13% of women have access to a phone, but only through somebody else, often a man. And so if I can only access a phone through a man, how can I access a digital account in my name, right? And so those are some of the things we look at. The last thing I'll just say that is a barrier for women and that are preventing perhaps financial service providers from reaching them is literacy and digital literacy. So even though we've got that 4.2% gender gap in Kenya, there's almost a 10% gender gap between women who can read a text and understand what it means and men. And 18% of women are unable to read a text at all. And so if you're thinking about digital and the power of digital for reaching women, that inability to interact through a text is a real barrier. And so what we've seen, I put a couple of links in the text and then the chat of some recent work we've done looking at financial sector laws that are different for men and women, and also a look at what are the needs of a particular set of women, which is female retail traders. And one of the things that we saw there was when we put that research out, we had several supply side players who said, come, present this to us, help us understand how we can reach this market segment. We want to reach them, but we don't know how to uniquely meet their needs. And so that is an ongoing conversation that we're pretty excited about.
Really appreciate that. I think what's really clear is on the how-to, it's not about pink bows and red ribbons on our products and services or even marketing, although marketing has a role with overcoming some of the social and cultural norm barriers, but really appreciated your pointing out the barriers that actually go beyond product and are really upstream in terms of the passport into the financial system in the form of the ID and the device that they're going to use to be able to access at least the digital system, and kind of the impact of not having those on agency in terms of the decision making and choice that the woman can have over her account. So really appreciate those call outs and kind of that capacity gap on both literacy, numeracy, and digital literacy overall. Melissa, wanted to come back to you on a question. We've heard from our regulators in the conversation so far, including the findings from this, analysis that there's a need for both skill and will. And when we think about data, there's the upstream collection and analysis, which needs to be reliable and high quality. And then there's downstream when it comes to using that data to go to insights and to go to decision-making and design of products and services. And we heard from Rebecca at the opening around there's this gap of what is it going to take to not only gather and disaggregate the data, but then just start using it. And she mentioned one example of, maybe management starting to use the data, incorporating it into their management reports, maybe their dashboards. What do you think it's going to take? What would motivate the financial service providers to take action?
I would say two factors might have an effect. First of all, of course, reporting requirements is very important. And as we've seen in other countries where regulators have imposed gender segregated data-based reporting by the banks, that had a big impact on financial inclusion. So we know that, or we have evidence that this type of regulations, reporting requirements, increases women's inclusion, financial inclusion. So that's one thing, of course. But the second thing is creating or supporting, facilitating women who would be included in the banking that would then increase the opportunities or make them more visible by the bank's management as a future source of revenue and profitability, not only revenue, because profitability matters. And here what I see is that the macro factors that have an effect on women's inclusion are the ones that need to be tapped by the regulators and lawmakers. For example, in Turkey, 89% of the unbanked women do not participate in the labor force. A lot of women work in informal economy, right? So addressing the reasons why informal economy is such a big part of the Turkish economy is probably one of the biggest, let's say, interventions that the lawmakers and regulators can do to increase women's inclusion, financial inclusion. If only they receive the payments through banking system, that would have a big impact. And also, the labor force participation is the lowest, I think, among the OECD countries and lowest among the middle income countries for Turkey. So increasing women's employment through incentives, through tax incentives or other means will also have a big impact than the little efforts of individual banks might do. So it all comes to how to increase women's employment, how to make sure that the informal economies address those who receive their salaries, their wages in cash, receive them through banks. These are the two very important areas that the lawmakers and regulators can signal to the banks that there is a potential for inclusion of women in the financial sector. These are the most important things. But other than that, for example, sectoral targets of certain sectors where women are employed, again, informally, could be one way to address the issue, like in agriculture. Looking into how women working in agriculture can be included in the banking system could be very specific projects to look at. Or child benefits or other social payments to families. It's so easy to have a regulation or a law which says that these payments would be made to the woman. And that will immediately, I guess, include a lot of women in the banking system if this was the decision, because most of the women who don't have a bank account are housewives, quote unquote, therefore they have unpaid laborers, and that would make a big difference. And from the bank side, of course, tax incentives or capital adequacy requirements based on gender could obviously encourage banks to look at them a little bit closely, I would say. I'll stop here.
Thank you. Really appreciate all of those examples. And I know that you have a particular expertise around corporate governance and boards. And, in addition to the regulators requiring them, there's huge potential and maybe even some of the investors, the boards of these financial institutions asking for this information, not only to be able to, from an accountability nudge perspective, but maybe even being able to compare and contrast across their portfolios to determine opportunities. So thank you for this perspective. Tamara, I wanted to turn it over to you, and maybe if okay, pick upon the comment about Melsa around the informal economy and some of these contributions, whether it's around unpaid care and other examples. I know you have been based in the field on the grounds for over a decade in Kenya. You've supported the development of the financial sector overall. You've worked with government, you've worked with financial service providers, with donors, and with innovators. And I just would love to hear just realities from the field. What have you seen is unique about the digital opportunity here? Some of the points that Melsa pointed out around informality. Would love any reflections.
Yeah, no, there's so much we could say, Rosita. And I do think this informality point is really important. So I'm glad you brought it up, Melsa, because more women are working in the informal or that, and in fact, I'd like to just say, we don't see formal and informal as a binary. It's often kind of this continuum, right? And so a business might be kind of registered, but not pay taxes, or it might have one informal employee and several informal employees. There's all these different ways that levels of formality, but women tend to be more informal in terms of their business, but also in terms of their use of financial services. When I was looking at the diagnostic, which I only had a chance to look at today, it's talking about how many women versus men have formal accounts, and then talking about the informal financial services. And it talks about those who have the informal only account, which are those people who only use informal financial services, which is, around 6 to 8% in Kenya. But when you look at even those with formal accounts, and especially women in Kenya, still use informal finance. And so one of the conversations that we've had with the formal financial sector is, what are you not offering? What is it that the informal financial sector is providing to women, especially, that they can't get from you? And some of that is social, and some of that is community, and that I don't think formal financial sector will necessarily embrace, but there's also more flexibility. There's the ability to negotiate. There's an understanding that, my kid's sick this week, I'll pay you next week, kind of a thing, which there aren't mechanisms in the formal financial sector, but there could be. And you asked, Rosita, about the opportunity for digital. Digital gives us the opportunity for flexibility if we can figure out how to navigate that. And so I think there's just so much excitement. I mean, one of the things I'd like to say about Kenya is, I mentioned how several formal financial service providers reached out to us to find out more about this research. We want to know more about women. We want to meet their needs. And I think that the leadership of players like the Kenya Bankers Association has been really powerful in that, because they're bringing the banks together and saying, how can we reach women better? We've got this great demand side data on men and women. How can we match that with the supply side data so that we can look and see what's really happening? I mean, in the same way that women use someone else's phone, women often use someone else's bank account. And so if we only look at who's registered, which ID is a link to this account, we may miss out on some of that richness of kind of almost the informality of a woman using a man's account to achieve something. I think that's an important characteristic. I talked about IDs, I talked about phones. I think cards are also really important. Often there's just one card, and if it's biometric, then only that person can use it. But if it's kind of a shared family card with a pen, people can use it. Or something like the National Health Insurance Fund, which is a government health card, and there's a family cover. But often it's the man's name, the man who has the card. And so if a woman or a child needs to access that health insurance, which is a financial product, of course, they can't unless they physically got that card. Now that's beginning to change, and there's systems in place. But I do think we need to kind of look at the mechanisms for engaging and how we can bring more women in, bring this kind of formal, informal mesh, right? So that we can really meet people where they are and with what they want to do.
Thank you. I will pause this conversation. We need to start wrapping up, and just will share, you guys have given, both of you have given us so much thoughts in terms of solutions. You've identified some barriers, and whether you're a government, you're a donor, a financial service provider, the three things really stood out to me. One is the business case. We all have a role in building it, asking for it, using it. The need around usage, that combination of skill and will that's necessary. And finally, all of us have to step up and be those champions. That's really going to help both create the internal changes that are necessary to gather, use the data, and then obviously integrate it into decision-making and product and service design. So thank you to our experts. I will now turn it back over to Myra for the wrap. Thank you.
Thank you so much, Rosita, Melsa, and Tamara. It was really incredibly interesting. I'm not going to summarize. Unfortunately, we do not have time for questions, but I do want to read a couple of questions just to leave them out there, and because they're really important questions. One question from a student at Johns Hopkins University, Chiedo, and Dr. Takiya had, in a sense, the same question, is, aside from the mechanics of financial inclusion, how we can overcome the long-standing cultural and norms impediments, how we can go about changing mindsets, as Dr. Takiya said. That's the first question. A second question is the role of credit registries. If the information of credit registries can really help expand access to finance for women. So I leave those questions on the screen, and I go to reflections from Greta Bull. Greta is a long-standing expert on financial access for the poor. And from recently now, she has joined the Bill and Melinda Gates Foundation, and she's the director of Women's Economic Empowerment. Greta, is all yours, and just to acknowledge again how grateful we are for the support and the guidance of the Bill and Melinda Gates Foundation.
Thank you so much, Myra, and thanks to the Data Tax team. And boy, I have a real challenge to try to sum up some of the amazing conversation we've had today in 10 minutes, but I'll see what I can do probably in less than 10 minutes. I was struck listening to the conversation by 3 questions. So let me pose those 3 questions and then maybe try to get at them in the comments. First of all, I should start by saying, we're thrilled to be part of this exercise. So the Gates Foundation is obviously extremely committed to gender equality, to women's economic empowerment, and data and sex disaggregated data are pretty central to what we're doing. So we're delighted to see this move into the financial sector, because as a data-driven industry, I think it's really important that we start getting at some of these things. But the questions I was struck by when I was listening are the following. One is, what exactly do we mean by women's financial inclusion? I think for a long time, we've got sort of focused on this access and usage binary that has us a little over-indexed on access to accounts and not thinking enough about the different kinds of products. So I was really happy to hear, Tamara speaking a lot more about that. And then I think equally important to think about is, what for? Nobody woke up and said, I really wish I had a bank account. Like, what are we using these bank accounts for? And what are we using different products and services for? And I thought Melsa made some really good points about how financial services intersect with the real sector. And they're only really useful as a means to an end, which is improving people's livelihoods and enabling lots of functions that we can't do when we're operating in a cash economy. So I think being grounded in that finance for what question is really, really important. But then I was really struck, my third question is, I was really struck by the conversation about the business case, right? And as I was listening to, I think it was Melsa talking about this as well, business case for whom? So I think, if you're thinking narrowly about a business case for a provider, yeah, we see a lot of providers not serving women, not serving low income segments, not serving lots of people because the business case isn't there. But I think if you think about it as the business case for society, for growing your economy, then we are like falling over on financial inclusion and deepening financial services to help develop economies. I think that's a really important perspective to build into this, particularly for regulators, because in many cases, our financial sectors are not building our economies. They're financing the government or they're financing big corporates, and there's a huge gap in the middle. And I'll talk about that more in a minute. So, we spent a lot of time today talking about the importance of supply side data, and I couldn't agree more with that. We have a pretty rich demand side data set, not only with the Findex, but through different kinds of FII surveys that take place, FinScope, et cetera. We have a pretty good picture in a lot of countries about what's going on in the demand side, but we have almost nothing on the supply side. The one thing we have is the GSMA State of the Industry report, which tracks what the mobile money industry is doing in terms of financial services provision, but it doesn't actually give us a very granular picture of financial services writ large. And that speaks to this point of being really over-indexed on access to accounts and usage of accounts. That's a useful goal to have, but it's not very deep in terms of financial sector. What's missing from that picture is the banking sector, and not to mention other parts of the banking sector, like, for example, the inclusive finance ecosystem, microfinance institutions, cooperatives, SACCOs, fintechs. There's a whole bigger picture out there about what's going on in the supply side that we really miss because we're not gathering this data. I think the other issue with the SOTIR being our main source of supply side data is it's very heavily Africa focused. Great in giving us a picture of what's going on in Africa, but we're missing some things about what's going on in the banking sector. And the other thing is it doesn't really tell us much about credit, savings, insurance, financial services that go beyond just access to and usage of that pretty simple account. And even beyond that, for women and men, are we getting fair treatment? Are we getting loans on equal terms and conditions? There are a whole slew of issues that don't get covered in that kind of work. And so I think we still have a lot to do on this topic. So we're really excited to be supporting this. And where we've seen countries build out that supply side data, we've seen that those countries are using that data to do better decisioning. And that's true at the country level, but it's also true at the provider level. We are moving into an era where data-driven decisioning is very important in the financial sector. And this kind of data can be used for both private and public goods, right? But I think we have to acknowledge, and some of our speakers alluded to this, that good supply side data is hard to come by, and particularly sex disaggregated data, right? So, first of all, we have a whole thing to do to sort of think about what harmonization of data looks like and what the indicators are. In the business sector, it's particularly challenging. Who owns that business? Is the woman the owner of the business? Is it a family business? So it gets really complicated really fast. So we need some harmonization and some clarity about what we're trying to measure. Obviously, reporting protocols and the means of collecting that data is important. If we're collecting it with the prudential data gathering we're already doing, that's a great start, but then, it's a heavy lift. And then, it often requires changes to banks' MIS so that they can create that data in the way that the regulator's requiring them to. So just as an anecdote, I lived in Peru for about 5 years. Peru probably has the best data on the credit market I've ever seen. It's incredibly granular. They produce it once a month. It's really good data. To my knowledge, it's not sex disaggregated yet, but they could probably do it. But they changed the way they did it when I was living there, and it drove everybody around the bend. It's a heavy lift. And so I guess that leads me to my last point, is that we really do need to be clear about what we're wanting to do with that data, right? So we would all love to have sex disaggregated data across the board in everything, right? But I think we have to, as a starting point, try to be clear about what we're trying to solve for before we go out and require lots of changes. So if we want to get the prudential data in a sex disaggregated way, great. And then we have to think about connecting the dots to the usage of that. And there may be things that we're overlooking. Could we look at partnerships with fair conduct authorities and see if women are getting credit on equal terms to men? Is there a gap in credit access, et cetera? And so I think we need to think in a pretty deep way as we move down this path together of collecting better gender data. What exactly do we mean by financial inclusion? What's it for? What are we trying to solve for, so that we can be thoughtful about what we're asking financial institutions to do? And then ultimately, and I think this is particularly true of credit, which is very sparse in many countries, is, business case for whom? So if the business case is for developing your country, then having half of your population sitting on the bench is not going to do as good a job at developing your economy as having the whole population mobilized around trying to build the economy. And so I think there is a different lens that we need to put on this about development that goes beyond a narrow business case for banks, because if we built everything on a narrow business case for banks, we wouldn't have much financial inclusion, to be honest. So super encouraged by this work, really looking forward to continuing the partnership and seeing where this collective takes the work, hoping we can get some more parties involved and get more regulators kind of pushing this, and really excited to see where things go in the years to come. That's it for me. Thank you.
Thank you so much, Greta. I think that you very nicely brought it back to the question of production and use and the link. In order to foster production, you want to know what the data is being used for. Thank you so much. I will now turn it to Ines Murray, the CEO of the Financial Alliance for Women, our great partner in this adventure since 2014, we've been together, and Ines will close the meeting. Ines, all yours.
Thanks so much, Myra. Excuse me, I have a cold. I started out in women's financial inclusion in 1996 when I joined Women's World Banking from a large consulting company whose bread and butter was providing data, shaping it into strategies for the leaders of corporations to implement. When I crossed over to financial inclusion, it amazed me how few microfinance providers ever talk to customers, designed anything based on data. We developed a research practice at Women's World Banking and made customer research mandatory as part of any technical assistance project, despite pushback many times from practitioners because of the cost. Concurrently, we and the sector more broadly, many of you, in fact, on this call today, worked on what KPIs to track, developed through a network and industry-wide consensus building process over many years, and enabled the establishment of standards, benchmarks, targets. Managed performance, investors working with practitioners to reward and enable growth. The sector grew, informed by data. I'm sharing this because it is so clear to all of us that gender data is primordial to women's financial inclusion. It shines a light, measures where we are, prompts us to do better, shows us how, builds accountability, and potentially shames us into action. 10 years ago this April, I joined the board of the Financial Alliance for Women, then called the Global Banking Alliance for Women. I recall at that first meeting having a debate with Chris Sullivan, head of corporate banking at Royal Bank of Scotland, now NatWest, about the need to disaggregate customer data by sex, for I knew how important it was to measure the performance of our members. Chris was somewhat baffled. Why would a banker need to know that information? 10 years on, Alison Rose, CEO of NatWest, has led the UK financial sector to report data on the supply of financing to women SMEs. It feels that we are at a pivot point in terms of increased understanding of the power of gender data to drive women's financial inclusion. Powerful in particular in the context of its rallying the ecosystem behind concerted, fact-based national strategies. Powerful also, in fact, totally necessary for FSPs of whatever stripe if they are to design and deliver to women's markets and scale. Without measuring performance, the business simply will not grow. We know this because we live and breathe this at the Alliance. It's challenging for our members, and at the beginning, to get the data, it requires some know-how, some investment, and an important ingredient that Myra mentioned, political will. Leadership must be behind it. Once it's there, the business case becomes evident. Strategies can be tweaked, performance managed. Women's markets managers regret they didn't push for it earlier. So we know how to do this. We know how to deliver meaningful, value-added, holistic value propositions to women customers of all segments. But we do need scale. We do need more than one flagship bank in each market, one pioneering fintech, one disruptive neobank. This needs to go mainstream. If you build for women's markets, you build for any market. Problem solved. We've learned a lot during these pilots and appreciate the huge efforts made by individuals and institutions in each of the 6 countries. We have an emerging blueprint from the 6 that can be applied to other countries. Let's take this to the next stage, deepen the use of country dashboards, build the capacity where it's needed, and use the data to drive action. Thank you to the Bill and Melinda Gates Foundation for underwriting this process. Thank you to Data2X for your collaboration, and to Consumer Centrics for all your insights. Thank you most especially to Rebecca Ruff, who has led this work for the Alliance. Thanks to all of you on the call today. We look forward to continuing to work together. Thank you.
Thank you, everybody. Have a great day.
Thank you.
Thank you.
Thank you.